So does the economic picture get worse in the third and the fourth quarter for South Korea?
Good morning, Shuri. Thanks for the question. Of course, we do see a sequential slowdown in the second quarter, but going to the second half of this year, we might see a slight recovery in terms of the sequential move as the exports continue to support the external demand-driven recovery story there. But we are concerned about the domestic consumption and the domestic slowdown that could deteriorate further in the second half with the prolonged elevated interest environment in Korea.
So you're constructive on the export side of the equation, but you are concerned about the domestic economy, Kathleen. Where then does this put rate expectations at the Bank of Korea?
Of course, we do stay still bullish on the exports there. We do see the tech upcycle still ongoing, although the valuations and the stock prices might have peaked in the late cycle story. But the fundamental real exports and shipments momentum is still very strong. And we do see that continuing through the mid-2025 cycle. But the concern remains on the domestic consumption and slowdown in the domestic activities, including investment across facilities and the construction sectors. And that should put downward pressure on the consumption from the demand side on the inflation, as we've seen in the August CPI inflation just out this week, which recorded 2.0%. Of course, it was partially driven by the base effect, but also we did see the demand inflation in the services continuing to stay relatively muted. So in that sense, we do think the BOK could move as soon as October with the rate cut, as soon as we do see more material signs in the housing market stabilizing from here in the next 5 to 6 weeks.